Hi, everyone. It's Peter Kraut of Silver Stock Investor and Silver Advisor with another episode of the Pay Dirt podcast, where we interview management of companies that we recommend, but also personally own, track, and report on. And today, I'm joined by Peter Lekich, who is responsible for investor relations over at New Pacific Metals. Peter, thanks for taking some time to explain some really big news over at New Pacific.
Thanks, Peter. Yeah, happy to be here and share the news.
Fantastic. So why don't we just jump right into it? There is an updated PEA. This is really big news. It significantly strengthens the Carangas story. Maybe you can walk us through that a little bit, kind of give us the high level view, and then we can drill down into more specifics.
Sure. Yeah, you hit it nail on the head there, Peter. It really does strengthen the story. And what's exciting to me about this is we're actually getting the full potential out of the Carangas ore body. Whereas before, if you remember, we were just scratching the surface of the silver zone. Given where metal prices are today and sort of what investors are interested in seeing is big projects producing big amounts of silver, and that's what we've done at Carangas. The whole project now includes not just the silver that was produced in the previous PEA, but also the gold zone that was at depth, giving us a significant amount of silver production per year, or silver equivalent production per year over the life of mine. It positions the project actually as a large scale silver gold project of the quality that you don't see a lot of, frankly, today. So we're very excited about it.
That's fantastic. Now, obviously scale and value wise, you've demonstrated that it's grown. But the economics are also really strong and on a long-term scale. Maybe you can talk to that a little bit.
Yes, as you can imagine, with this level of production, we're outlining at, sort of a very conservative level of $45 silver, $3,400 gold, an NPV of over two and a half billion dollars after tax, with a 36% IRR, which would pay back the $650 million of capital in about 2.5 years. So really, significant, I would say, economics at relatively conservative prices, to be frank, at $67.50, which was sort of our proxy for spot silver, which we're getting close to again. On an after-tax basis, we're looking at $4.2 billion, pardon me, of NPV and a 50% after-tax
Wow.
IRR. So this is a really, for a project this scale to have economics and particularly returns that are this high, again, very exciting.
It was clearly very robust, and like you say, at spot prices, improves significantly. And I mean, the if you look at the initial capex versus the NPV, those are very compelling numbers. So yeah,
Yeah,
it
yeah,
needs
very
to.
excited to see that kind of capital efficiency again on a project of this size. I'm pretty excited about that.
So you highlighted this at the beginning, but now the production profile provides exposure to both silver and gold. And so
Mhm.
maybe you can tell us a little bit about that and how that sort of changes the dynamic a little bit.
Yeah, it really is. We'll talk a bit about the mine plan, I guess, at Carangas. So really, we start off with an 8 million ton a year project, producing silver, a little bit of lead and zinc byproduct, and then stepping up to 16 million tons. We run at that rate for about 4 years, and then we convert to becoming a silver gold operation where we produce, 8 million tons, process 8 million tons a year of silver ores and 8 million tons a year of gold ores. And what that means is over the 19-year life of mine, we're producing, just under 200 million, 195 million actually ounces of payable silver and 1.1 million ounces of payable gold. That's about 340 million ounces of silver equivalent, or roughly 20 million ounces of silver equivalent per year. So another way of thinking about that is, the first 8 years when we're doing silver, we're going to do 15.5 million ounces of silver. That's not equivalent. That's pure silver. And for the next phase, even though we're producing 140,000 ounces a year of gold, we're still going to produce 7.5 million ounces of silver. So still a significant amount of silver, even when we get into the gold phase. So
Right.
really exciting project. And again, not a lot of projects out there doing 20 million ounce equivalents over a 20-year mine life.
I mean, and if we're talking just about the actual silver at 15 million ounces a year,
Yeah.
if my math is right, we're talking about 1.5% of annual silver production
Yes.
globally,
Yes.
right?
No,
At a
this
billion
really is a
ounces.
again hit the nail on the head. This is a significant silver mine. As silver is a commodity that often comes as a byproduct or often comes, from relatively smaller mines. This is a silver mine that can stand with, anybody on the sort of top 10 of the silver production chart.
That's impressive. And so, the focus, as I understand it now, is on continuing to advance and de-risk the project. Maybe you can tell us a little bit about what we can look forward to over the next sort of several quarters and beyond in terms of how you're going to go about that.
Yeah, no, the first and foremost thing we do as responsible developers is, focus on the community. So we've been working very closely with our community at Carangas over the past 6 months, working towards an agreement and ultimately submitting an application to convert our exploration permit to a mining permit, which is the next phase on the development path. So that's gone very well. And so now we're going to start some of the technical de-risking. So we'll kick off at the end of the month here into early September, a 30,000-meter infill drill program. We've been talking about this for a while, but we'll get it going now in September. About 25,000 of that or so will be infill. The other 5,000 meter will be, testing some of the gold zone at depth. We are open along strike in the gold zone, and then also testing some greenfield targets. So, a little bit of true exploration there, but also very important work to advance our project as we move towards feasibility level work. And we'll also begin, gathering data for the environmental process and some of the other technical work and engineering work behind the scenes to continue to push it forward.
So definitely moving along quite nicely. So
Yes.
we've been talking about Carangas all this time, but the New Pacific is about more than just Carangas. It's got another really big and significant project in its development pipeline.
Yeah.
Tell us a little bit more. Tell us about
Yeah. So, I mean,
besides Carangas.
Silver Sand, historically was the flagship asset, and that's the asset that brought us to Bolivia. Now we like to say we have two flagship assets, but we shouldn't forget about Silver Sand. I mean, we put out a PFS, I guess, about 2 years ago, looking at $24 silver. The economics of that project, $740 million NPV, 30%, 37% after tax IRR. So obviously, if you put that at spot, those numbers are significantly higher. So this asset would produce 12 million ounces of silver a year over a 13-year mine life. So again, if we combine, sort of the 15 and a half you highlighted before with this 12, that's 25 million ounces a year of silver. That's a significant level of silver production. And we have that in two assets, again, both, well advanced technically and moving towards permitting.
Well, I can tell you that based on how I've been enjoying watching the share price lately, I'm not the only one who recognizes that value.
Yeah.
I think that a lot of investors are really starting to pay attention and realize that you have two really special assets there, and you have real claim to being able to move the needle in the silver space, and so it's nice to see that recognition. So Peter, thanks. This has been a great overview. I really like hearing about these latest developments. We'll continue to watch for ongoing news and look forward to catching up again soon with you.
Appreciate it, Peter. Thank you for taking the time.